Stock markets in China are taking a beating right now. I've discussed this in previous videos, but today we will discuss how the stocks are crashing despite this massive government intervention. You came here for the truth, so let me unveil that for you. Let's get into it today, break it all down, connect the dots as I always do. And we begin with this chart right here, the CSI 300 futures down 15%. Minus 5% at the opening. So you're seeing a dramatic loss in the stock market in a relatively short period of time. This should be sending off warning bells, but of course it is not in many circles. Very important information. To break it all down, exactly what has been occurring, we have this chart out of Zero Hedge where they literally go in and break down every single point that has occurred. And I'm not going to get into it all. Should you wish to, you can just go to either the description below and the link will be there, or you can just pause the video. But we have on June 27th a rate cut. You have activities with the pension funds, and you have basically what I've been covering here is that we have the government stepping in. And the way they do this is through their central bank. They are funding a corporation which is buying up shares. So they are essentially indirectly printing up money to buy up the shares of the stock market. That's what's happening. As they're doing this, however, the stocks are continuing to decline. Why? Because people don't care and they're still pulling their money out anyway. They know it's a huge bubble that has been existing. They just pull their money out and they'll invest it in real estate or anything else, but definitely not in the Chinese stock market, at least for the moment. And this right here out of the Wall Street Journal, China stocks on Monday suffered their sharpest one-day percentage decline since 2007. As worries mounted that authorities are pulling back measures to prop up the market. I don't think they're going to pull out right away. I believe that they are going to keep this going for quite some time because of how serious it is. Since the Shanghai Composite peaked in June, it has lost 28% of its value. Massive intervention by authorities in Beijing engineered a rebound for the country's stock markets earlier this month. But Monday's sell-off eroded much of that recovery. So real investors are pulling out. Fake printed money is coming in, but that's not stopping the real money from coming out. So the same thing is just going to continue to occur. If you think about it, a 30% crash, it's not too far off. If this continues on the trend line, not too far off from 50%, and that would be a massive blow to the Chinese stock market, everyone invested, all the suckers who have been pulled in. So let's get into this. As I discussed in my book, Central Banks, the chapter on central banks, I quoted Alan Greenspan, everyone's favorite. The United States can pay any debt it has because we can always print money to do that. When he said this, he was being absolutely serious, basically suggesting that there is no amount of debt that we can't pay. We'll just print up the money to pay it off. The reason I mention this is because what's happening in China is the same mentality. They basically say, we'll support this stock market. We don't care if real investors are not here. We'll print up the money. We'll become those investors. It doesn't work like that. You can't generate this type of activity through printing money. Doesn't work, never has, and we can see the failure as the stocks continue to decline. Look at this, Asia Pacific automobile sales units declining heavily over the last year because the economy is not doing well. That's particularly in China. You can see that if you look at the growth in automobile sales in China right now, again, over the last year, it is in a decline. This is just one indicator. I wanted to show you that. Very good stuff right there. And also two types of business cycles. You can see that you have the USA one on the left, Japan in the middle, China on the right. So the pre-Greenspan V-shape that they're discussing here in the 70s through the 80s is essentially a downward, you have this little decline and then it goes back up and continues on the trend line. In Japan, it went up on this trend line until the point of that crash, until the point of that intervention, and it never goes back to the old trend. The exact same thing is happening in China right now. It may be early to tell, these are all predictions at this moment, but if they continue to go this way, it's going to go the same route as Japan. But I believe that the US will as well. Every country is going to achieve this new level of stagnation simply because they're not allowing the system to crash. You have to let it crash. Real investors will come in and they will buy up the shares, they'll buy up the real estate, they'll buy up all the assets. But of course, it's not going to happen. Then we just want to move on to this right here, looking at the most important trend line since 2009 has been broken. This is the S&P 500. Just wanted to show you this. This is definitely one of those technical indicators here, but all we have to show you here is that we're on a decline. You can see the red line here at the bottom where the volume is. It's hurting. The stock market's hurting all around the world. Many people are in fear at the moment. This happens to be one of those instances. Today, I'm just going to leave it right there. I wanted to note that these are very serious scenarios that we're running into. Basically, we have a stock market that can't even be propped up with trillions of dollars being pumped into it. That is sad. It's a very sad day because at least the money has to flow into an asset class. You print up money, whether it goes into commodities back in 2008, whether it goes to the real estate bubble just before that, whether it's the tech stocks before that. And these are cycles that repeat and generate themselves as they go on, as long as you keep printing the money. But it seems to be wearing off at the moment. All they have to do, though, is start up the printing presses and they can have their boom yet again. I don't think they're at that point yet because if you look at the US stock market, it is up significantly from where it was back in March 2009. So I don't think they'll start a QE4 right away, although you can best be sure they have it waiting and ready to go should they desire to do so. If you found this video informative, please give me a thumbs up. Just want to note that, I've really received such a positive response from all the subscribers here, and I really do appreciate that very, very much. Thank you to each and every one of you. If you found my video informative, I know you'll find my book, The Money GPS, even more informative. You can actually look through the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book to see if you like it for yourself. Take care.